Alrighty, welcome back to Weenie Trades. I'm Greg, I'm an options trader, and I'm coming up on my 5th year of trading, and I'm here to share my current thoughts on the stock market with you today. I'm going to be covering the SPY, I'm going to be talking about Nancy Pelosi's trades and Roblox earnings coming on up. I'm going to be talking about what is a bear call credit spread, and then I'm going to be offering a few trade ideas just to generate some inspiration for the upcoming week. So let's get right in the video. First up, we got SPY, expected move for the week. That's what the market is pricing in for the range of the week, is $13.50. So if we take a look at the chart here, that represents this teal line right over here. So this kind of light blue tealish line, 453 on the upside, and all the way down to 426.50, 427 area. I am leaning just a little bit bearish on the SPY. And the way my positions are I took a lot of profits on the negative deltas on Friday. So I'm sitting in cash and then just a little bit of negative deltas. That's kind of how I'm positioned for the upcoming week. In terms of support and resistance, SPY broke a lot of support. So if we're rallying, into, 446 area, that could be an area to potentially go short. 446 all the way up to 448 is a supply zone on the SPY. And again, that's just a potential area to go short. I'm not telling you guys to go long or short any of these securities or ETFs. I'm just stating out supply zones, basically. So SPY, 446 to 448 on the upside. I would be very surprised if SPY got above 450 this week. It would be unreasonable or unlikely to see SPY above that 450 level, in my humble opinion. What I think we might come down and visit is this, 433 area, so 433. Down to this 427 area. So slight bearish bias on the upcoming week, but if we are rallying, it could be a potential area to go short. If we are extended into this support area, it could be a time to sell midweek put credit spreads. We'll have to reevaluate that at Weenie Trades Live though. So that was the resistance and support. Hopefully you guys were prepared on Friday. I said if we are coming underneath that 448 level, we are likely to see 441 real quick. Well, we went even a little bit lower. We went as low as that 438 level. So crazy drop on the Russia-Ukraine war news. I hope things don't escalate, but I think as traders, we need to be prepared for anything. So stay vigilant. Analyze the price action. If you could see at Weenie Trades Live, I was going short before the news had occurred.
It's like
it still
that was all the squeeze it could get, and now it's gonna roll over and die.
It's that's how a descending triangle is made. Like buyers attempt at that level, they bounce it. Buyers attempt again, they bounce it. Buyers attempt again, they bounce it. They're getting slowly less ground. They're getting a little bit less ground each time.
I don't know. The bears are getting less ground each time too. This is gonna be interesting.
Profits quick. That's awesome. So you just bought the lower low. See, like for me, like I don't really see like a setup. There's a short setup right there at the quick stop above 447.80. I'm considering actually that. It's a savage move, but it could be done. I'm gonna do it with like a $3 stop. Literally just like if it doesn't break down, I'm not getting in. Yeah, right there. So putting in a buy stop. Sample stuff, I'm sorry if I flush the market with this stop order. Well, this one might trigger right here. We'll see. It's about to trigger.
Usually I would request that you put in like a sell stop above the market if I wanted it to push higher.
Yeah, there we go. That might trigger right there.
But it's going to trigger you in and then go in my favor.
Yeah. Okay, just triggered me in.
Because we're using a stop.
Okay, just triggered me in again. There we go. Just give me one more flush, please. No. So far, 2 buy stops triggered in.
As long as we keep going nice and slow like this, I'm totally fine with it.
Yeah.
Did it just load you up on the rocket ship? Is that what it did?
Yeah. There we go. Here we go. Pay me. There we go.
Take another quarter out. Facebook, thank you very much. 25% left.
1.27 on one of them. Nice. One more left.
222.20. Let's see if we can hold the rest. See if it flushes down to like 216 or something. We'll see.
Beautiful sell stops. I already got my partial, so this is a free trade, winning trade. Looking for at least another partial at the 445 area. I'm actually going to put in a stop order now. Rest in peace, my stop orders.
Come on, Facebook. Don't kill the market, but just move it down slowly.
There we go. There we go. That's just what I'm looking for. 1.35.
Back to break even on my trade.
Just trailing down the stop. It's probably going to hit, but if it doesn't, and I get a good flush, I get to ride it just a little bit more. Very good.
Yeah, I once had a guy tell me, like, with the last piece of your trade, if you've scaled out,
Yeah.
like, it's almost always better to always be stopped out of the last piece. Just always be stopped out of the
There you
last
go.
piece and think about
Done.
it that way.
So that was just a quick little SPY scalp. Shorting at the breakdown of 446.67, covering half at the breakdown, and then the second half at 446. Nice, good little move. It was definitely a pretty bloody day. You know, Tesla, hopefully you guys enjoyed that short trade idea underneath 900. We're talking about, hey, we're in this pinching range. Flat top, higher lows. What happens if the higher lows get violated? Well, Tesla gets clapped. You know, that's all there is to it. There's all those buyers that bought up at these prices got absolutely thwacked on Friday because look, higher low, higher low, higher low. What happens when you break the higher low trend? 900 was that key flush point. Tesla down 5% on the day. And actually, I want to show you what is a bear call credit spread. So if we quickly look at the trade tab over here, you know, I have a bear call credit spread. Well, what does that really mean? Well, basically, I am selling calls. And what does that entail? Well, I'm selling calls, but when you sell a naked call, you can actually have infinite risk. I don't want to lose infinite amounts of money. I like to have a max loss. So what is my max loss on this trade over here on the left? So max L, let's just say max L, and I collected a credit of $420 on this trade. I collected a credit of $420. So 420 credit, whenever you're selling a credit spread, the maximum credit that you receive up front is your maximum profit. So maximum profit is going to be $420. So how do I get that $420? Well, I really just have to do nothing because what did I do? I sold the 930 strike call expiring on February 25th. But since I can't just sell a naked call, I have to buy a call to protect. What that does is, hey, now I bought the 940 call. And what that does is it caps my loss. So now my max loss is going to be what? Well, the most amount of credit that I took was 420. The width of the spread, it's a $10 wide spread, meaning that's the most that spread can be worth is $1,000 if it hits the max loss. But I took in a $420 credit. So what is it? It's 1,000, the width of the spread, minus the credit that I received, the cred, 420. I know, right? Tesla's a meme stock. I'm going to collect meme credits for it. That means my max loss is $580. Well, why would I take this trade? My max loss is $580. I can lose a lot more than I can actually make. I can make the 420, but I can lose the 580. Well, the cool thing about this is I can cut this at any time. And so basically what that means is, hey, if I want to cut losses at minus $50, I can. If I want to cut losses at minus $100, I can. I can cut losses at minus $200. What's cool about this, and the reason that I took this trade was the probability. The probability of me getting the max profit is very high because I'm collecting less credit than my loss can be. So my max profit is less than my max loss. Generally in options land, that means your probability of profit can increase. And surely the trade is up quite a bit. The trade is up $224. But what's cool about this is all Tesla, for me to receive this $420, the full max profit, I just need Tesla underneath 930, the call that I'm selling. So when we're selling a call, we want the stock to just go away from it, go away from 930. So what does this look like on the daily chart? Well, basically, the longer that Tesla stays underneath this 930 level, 930, the more money that I get to collect over time. And as it gets to that February 25th, 2/25, then I get to collect that max profit because all those calls expired worthless. Now, I'm probably not going to hold till expiration. I'm probably going to take profits sooner. Maybe I get like $400 profit. Maybe I get like $360 profit. And then I just get to remove all the risk and take the trade off. What's cool about this is Tesla's an expensive stock. You know, it's $860 as of today. All I needed to take this trade was $1,000 in buying power, and actually just a little bit less because I'm collecting $420. All I need in buying power is $580. Isn't that cool? All I need in buying power is $580 and I can make $420. But it's really important to understand and how to trade options so that you can take advantage of the extra juiced up implied volatility and just get creative with the ways that you can profit in the market. So hopefully you learned something new about a bear call credit spread. Capped profit, but capped loss, time dependent. You want it to stay away from the calls that you're selling. So that was kind of like the bloody day of Tesla and other stocks. You know, let's talk about Nancy Pelosi. You know, she was in Google calls. Google gapped up on an amazing earnings report and stock split. But hey, guess what? They sold it. There's a reversal candle. So gap ups nowadays are for mostly selling. It depends on the context and the scenario. But gap ups are for selling. So Google over here, we gapped up. We started to close near the lows. And we started to sell off. And, you know, that day on Google earnings was not the day to be buying. And, you know, as you can see, things like Disney, the gap up was not meant to be bought. And look at this. Sideways to slightly lower. We talked about that on Disney, how that's likely to occur. And so let's take a look at Roblox, RBLX. Roblox has earnings upcoming. And Roblox, the expected move is about $14. So decently wide. If we just take a look at the chart, you know, there's some resistance at 77, and it's bolded, which means it's really, really strong resistance. So Roblox, as long as it's underneath 77, Roblox could get absolutely murdered. If we take a look at the trade tab on Roblox, you know, there's a lot of open interest at the 80 strike this upcoming week. There's a lot of open interest, I believe, at the 60 strike. Actually, sorry, this is February 25th. February 18th. Here we go. A lot of open interest at the 80 strike, at the 75 strike, a lot of open interest at the 70 strike. So as you can see, those big hold numbers. And that just means there's a lot of open options contracts at these levels. What I've tended to find over the years is that the stock tends to gravitate towards these levels and just kind of wiggle there at least a little bit just to see what traders are likely to do. But either way, on the downside, 60 put, a lot of open interest. So they could be short that put, meaning they want Roblox to stay above 60. They could also be long the put, meaning they want Roblox to absolutely tank beneath that 60 level. And that would complete this daily bear flag. So Nancy was right on Google, gets the gap up. Right on Disney, gets the gap up. Are you going to, does this mean you should buy Roblox calls? No, not in my personal opinion. As I always usually say, you know, you don't, each trade is independent. Just because Nancy was right on those other ones, for whatever reason, maybe. She might just be a lucky woman. Maybe. I don't know. But you would not want to be buying calls because, hey, there's an edge in trading after earnings. Just tune into We Need Trades Live. You can see us trade the post-earnings report however which way we want. You know, I can make way more money on a simple child baby-like pattern, little triangle pattern, little wedge pattern. It can make way more money on that in just like a few minutes than I can just gambling on a report. So I would not gamble on the report. You can ask me all about Roblox after it reports, but until then, as long as it's underneath 77, it's bearish. If it's extremely bearish if it's beneath 60. It's only bullish in my opinion, and even then, it's just neutral. It's not even bullish. If it can get above and hold above that 77 level on Roblox. So be sure to not just be following people just because maybe they do know something that we don't. They likely do, but that doesn't mean that we can create a self-sufficient trading strategy off of others like that. So that's just my little thoughts on Nancy Pelosi. Yeah, there will be some people that'll follow her and get clapped at some point. Don't be one of them. Don't be one of those people that just follow people and get clapped. I want you to be here for the long run. So that was Nancy Pelosi. Now a few trade setups, just not necessarily trade setups, but things to keep an eye on. Gold. Gold has started to break out on Friday with an increase in volume. This is cool because, hey, if we backtest and, you know, come down to this 170, 170 area and start to hold the support, maybe that could be an area to take a position on GLD. It has a nice, good liquid options chain as well. So lots of cool strategies to be done with GLD. And gold, that's the ETF version for gold. You could just track the futures or trade the futures. You could trade gold futures /GC or / MGC, the micro gold futures. I've traded those for a little bit. Pretty cool. Not as correlated with the market if you're just looking for something that doesn't always follow SPY to a T. So that's GLD. NEO is still a short setup, so just be careful. We talked about NEO being a short setup, underneath 35. We talked about NEO being a short setup underneath 30. Now we've broken down. Hey, nice good move down. Now we're kickback rallying into resistance. NEO, this is still a bear flag, and a lot of stocks look like this. A drop, counter trend consolidation. Gosh, that's really sloppy. A drop, counter trend consolidation. And then if NEO starts to come underneath that, 2250, you could grab put options, longer dated put options, and maybe see if NEO can get down to this, 1550. But that I'm not here to just pick on NEO. There, you could if the market's selling off and it's hot and heavy, the Q's got absolutely destroyed. IWM holding up relatively strong. We'll see if that becomes a leader in weakness again. But if the entire market's just selling off, you could dartboard anything and just pick some puts, pick up short shares, whatever you want, and just manage your risk, set your stops, and then just watch the carnage happen and evilly profit off of it, if you will. So, I'm just joking. I don't necessarily think short selling is evil. Let's just go on a little rant on this. Short selling is evil if there's so much short selling being done and you want like a company to fail and they're already like they like have a chance to become profitable, but then they just hammer in short, and they get their squad rolling up on the shorts, and then they just lose enough money so that they can't really recover as a business. That's when I think short selling is evil. On the contrarian side, I think there's nothing wrong with managing your portfolio, grabbing put options when you need it. Do what you need to do. If you don't want to be involved in the markets and you think there's a lot of risk in it, hey, all power to you. You don't have to diamond hand or hold just because somebody else is telling you to, or every single financial expert has said, buy the dip, buy the dip, buy the dip. That's great. It has proven to work in the long run. It doesn't always mean that it has to work in the future. It statistically will work in the future, but you do what's best for you and your account. And if that means you need to short some stocks, go ahead and do it. You always put the shares back in supply when you cover. So that's just a little quick rant on short selling. And the last kind of trade idea is Ford. If you guys recall, we called the Ford setup over 21, boom, nice good breakout. Then after it broke out and everybody's talking about Ford, I was like, oh boy, this pennant pattern is a little bit too obvious. Look for the false breakout. And what do we do? Well, we did the false breakout, a drop, a bear flag. This is what a bear flag drop looks like. Sometimes it's in the form of a gap down. And actually, Ford has another bear flag. So actually, what I'm looking to potentially do is let Ford sell off on one more bear flag, and then maybe grab some shares up in the down in the 15s and see if we can't get a quick little rebound to that prior breakdown area. So quick trade idea on Ford. Again, though, I'm not saying to buy or sell Ford. This is just something that may be setting up in the future. Happy Super Bowl Sunday. It's apparently like a holiday in the United States when it's Super Bowl. And I've been having a lot of football dreams lately. I used to play football back in high school. And if you want to see one of my pictures, high quality pictures over there, you can see that. Football should be fun. Comment below if you want the Rams or Bengals to win. Comment below what stocks you're watching. See ya.
Thanks for tuning